So the oil price is up about $5 a barrel, which in the context of $100 plus oil isn't that great a movement. You might have expected it to be higher for two reasons. One, Iraq's current oil output is about 4% of the world's total. But if you look forward, possibly more importantly, Iraq was meant to account for about 30% of the world's additional production in the next 20 years. And that's going to be hard to replace from elsewhere. So why are oil traders not more concerned? If you look at geography, a lot of that oil output at the moment is in the southeast and the northeast, well away from the current fighting. So in fact, we've seen production pretty much unhindered. There is the potential, if fighting spreads, for more movement, we think. It's really quite hard to find a foreign oil company that isn't exposed to Iraq in some way. But in most cases, that exposure is quite limited. And in fact, any negatives would be offset potentially by a higher oil price. So we're not concerned about most of the big oil players. The one name in our portfolio with the biggest exposure to Iraq is Afrin, a small player rated B+, with operations mainly in Nigeria, but with a bit under 10% of its production in Iraq at the moment, in Kurdistan. Afrin's interesting because it illustrates how this situation could play out in a more complicated way than perhaps the headlines would suggest. So at the moment, the Kurds are having trouble exporting crude because of a disagreement with the central authorities in Baghdad. If this situation allows that to be resolved or encourages it to be resolved, then we could see that oil flowing a bit more easily, see more investment in Kurdistan, and actually see output going up from that region. So losing 3 million barrels production a day overnight would be pretty difficult to replace. OPEC has about 2 million barrels a day spare capacity, and there are stocks. If you do the numbers, that simply doesn't work in terms of adding up over any period. We don't think it's likely, though, because realistically, anybody in charge of any area of Iraq will see oil as a major source of earnings, and they will try and keep that oil flowing. So losing 3 million barrels a day is a pretty big outlier as far as we're concerned. However, some loss could erode that OPEC spare capacity, and at that point, we've historically seen markets get quite jittery. So volatility's increased, prices go up. In the medium term, though, that could be a good thing. Higher prices bring forth more supply. North American shale is a really good example. A lot of the investment in shale is dependent on where the price is. If the price is higher, there's more investment, and there will ultimately be more supply.